Hello everyone, this is Ming Jong. Welcome to today's market analysis for the S&P 500 E-mini futures for the session of 27th of July. So in this video, I am going to show you the market recap on last Friday, and I'm going to show you two trade reviews that I did, and in the M3 time frame, which I will include the entry, exit, and the rationale behind. And the first trade was based on detecting and confirming the trend reversal happening during the London session. And the second trade was based on the Wyckoff law, effort versus results, and how I actually find entry out from there. And going forward, I will cover the bias, key levels, and also potential setup for the session later. All right, so let's just get started. As we can see in this daily chart for the S&P 500, there are a few things that stands out to me. So first thing that we have continuation of 2 days in a row to go down, and the close on the low of the price range here and on the last Friday as well. And then we can see that the volume is picking up, suggests that supply was present and increasing of the supplies together with the bearish results going down. And another thing is that if we compare it to the past actions, so this kind of the reaction is pretty much, I think, is similar to this. I think even this reaction is a bit severe than this one. So actually the reaction here is not as serious as the one that we have seen on around, I think, 13th of July here. And the last things that I would like to point out was actually this two bar here. So if we compare it to the these two bars in terms of the price spread and also together with the volume, we can see that the volume was pretty much very similar. In fact, if I want to really compare this, I would say that I think the Friday's volume was a little bit higher than Thursday's. So, but let's take a look at the price spread of Fridays. So obviously is definitely smaller than on Thursday. And in terms of the demand tail, I think they are pretty much similar. We all seen demand tail on the Thursday and Friday's bar. So what does it tell us? I would just think that there was a presence of demand on Friday's bar. And if we look into the H1, the hourly time frame, then we can find out a lot more detail, and even the shortening of the downward thrust is shown there as well. So from here on, I suspect that we should see a rally up to actually test the selling bar here, which I'll point out in the hourly time frame later. All right, so let me just go to the hourly time frame. Okay. All right, so there we go. This is the hourly time frame, the H1 time frame for the S&P 500. So first thing, what I would like to point out here is definitely the wave. So we have seen the decreasing of the down wave from this one to a bit shorter to this one. I think is the shortest. And in terms of the thrust, the downward thrust, if we want to compare it, we can definitely see that is getting lesser and lesser, getting very shorter here, here, and this two definitely has the character of the shortening of the downward thrust. So all of this just points out to that there's a demand showed up on the Friday's bar, which we can see it here as well. So let me just zoom into the H1 time frame to pay attention to how the price actually move. So we can see that prior to that, we have a sell down on Thursday and then followed by a very weak rally up. And then eventually we have a continuation to the downside. But that actually happened during the European London session. But subsequently, when the US market opens here, 9:30 my time here, you can see that we have seen some kind of the demand tail, inability to go down. In fact, it just barely tested about, I think 3190 is probably didn't really touch 3190. It's kind of like a test of this level 3190, and it gets supported. So we see the demand tail showed up here, and this is the demand bar, bullish bar, and then we have demand tail here again, and on the last hour bar again. So definitely there was some kind of the demand come in on last Friday, and we've seen that the downward pressure or force wasn't able to push down the price. So what I would like to see from here on is definitely some kind of the good rally up, and which we have seen it during the Asian session. And then this is kind of like a very shallow weak reaction. So I think we have a higher chance to go up and to test this selling bar here somewhere around 3260. So pretty much what I would like to see is actually go back up to see a test of this selling bar. Okay. Anyway, let me just get down to the 3 minutes time frame to talk more about the two trade reviews. The first trade that I had was during the European London session. Let me just drag this. Okay, so you can see that I have pretty much marked this up already. This is the US session, and that's the London hours. Okay, so I think if you have watched my past videos, this is pretty much a very familiar setup to you as well, because this is quite a standard kind of the reversal trades that I usually had. So let me just analyze this. So first of all, if you recall it, I actually do talk about potential long entry when we have a test of around 3190. But obviously, this is a bit higher than 3190. So I don't really rely on that level at the moment when I actually initiated the trade during the London session. You can see it somewhere here. But the key was actually in this price action or the character of the movement. So first of all, we have seen this kind of the reaction, and then followed by a consolidation, failure to move up here, and then cause another kind of the reaction down. But look at the volume picking up here, and on this level here, we can see that there's a spike of the supply here, followed by a weak rally up. So definitely this reaction comes with an increasing of the supply level, and then we followed by a test. So the test kind of like only this two bar. So one very big bearish bar here, and then second is actually the hammer bar. So the first change that actually prompted me to take a look was actually this bullish hammer bar. So it just signifies that there is demand come in on this bar, because the first bar here was actually very bearish, but the second bar we see that attempt to go down but quickly just reverse and close at a high and eventually just form this hammer bar. And look at the volume here. So we have seen this kind of the spike of the volume. This is the greatest volume that we have ever seen during the Asian throughout the London session. So definitely this is the first sign of the change. And well, actually, I'm sorry, I think first sign was actually, if I compare the swing here, this is the supply level, and this is the test of the previous swing here. So we see that the supply decrease and then followed by spike of the demand. So I think this is the first change altogether. And the second change was actually the break of this downtrend line here with this kind of the strong momentum rally. And this is the best rally that we have ever seen from this downtrend. So this is the second change. And the third change that was this kind of the shallow reaction. So I think this is pretty standard. The things that I actually follow to trade this kind of the reversal. So definitely just after the shallow reaction, I would like to seek a confirmation, which actually showed up here. So this is the confirmation bar here. So after the close of this bar, I just enter the long entry. Okay, so subsequently, I scaled up partial of my position at the swing high here. So this is the reason where I exit my trade, and then followed by this swing high level as well. So they acted as a resistance, and I take the chance to lock in the profit. So overall, it's quite a nice trade, and I follow my process and take the profits, and also, yeah, just lock in the profit before the US session started. So about 2.6 and about 2.1. So overall, I was very satisfied. Okay, so the second trade that I had during the US session was somewhere around here, around 10:30 my time here. So why did I enter the trade? Okay, first of all, we need to take a look at the context of the swings. So firstly, we have witnessed a reaction down here. So this is kind of a bit threatening based on the candle movement. So it seems like very, very bearish, and together with a spike of the supply here on these first few bars, and I think the spread is pretty significant as well. So definitely, I still watch my levels at around 3190. So I consider this as a test of the 3190 level. So we have seen a rally up, and then just because that the reaction was accompanied by this kind of the high level of the supply, so I actually anticipate a reaction down to give it a test of the prior swing here. So there comes this reaction here. So this is actually the test of this reaction here. And what's so special about this test? So this trade was actually based on the Wyckoff law, effort versus results. So just pay attention to these two bars where I actually zoom in here. Okay, so this is the first bearish bar here, and you can see that the supply level was, well, pretty okay, pretty normal. But look at the second bar here. So this is actually a very small bar comparing to this first bar here. And I think, in fact, the body of the spread, or the actual spread here, was pretty much maybe 1/3 of this bar here. But look at the volume here. So the volume of this little bar and is actually higher than the bar before here. So this simply means that there was demand come in this bar here. So in this case, I actually prepared to enter long. So what I would like to see is some kind of the confirmation, which actually comes in on this strong hammer bar here. So the next bar here, actually we see this rejection tail. So this is definitely not the entry yet, not yet. So this is got rejection tail on this bar. So this is not my entry. And in fact, this hammer bar actually acted as a confirmation of the demands, the presence of the demand in this small spread bar here. So just right after the close of this bar, I enter long. And one thing to note that is this kind of the hammer bar with a spike of the volume, and I think is pretty significant as well. It just confirmed that the demand was in, and also it's shown up in the result as well. Look at the close; it's on the high side of the range. And subsequently, I just trailed my stop, and eventually I got out at somewhere around this the bearish bar here. So it just stopped me out. I think that's slightly more than reward risk ratio of more than 1, if I think correctly. Yeah, it's about 1.1. So these were the two trades that I had on last Friday. Overall, I think they were good trades. So let me just get back to the H1, the hourly time frame, to talk about the current situation now. So as I briefly mentioned in my video earlier on, there was a shortening of the trust as seen it here, and also together with the down wave as well. So what I actually anticipate was some kind of the rally to actually test this selling bar here. So for day trading bias for today, I am bullish. For long-term bias, definitely still bullish. Nothing's changed. And for the potential setup here, I can think of definitely we still be watching the 3190 level because so far still got a few hours to go before the US market opens. Maybe you could do something like this, spring the level, go up, or if it just performs so bullishly, then definitely I think it could just consolidate a bit here, or maybe just trend up and test this non-RTH high, and then followed by a continuation to the upside, and to test the level at around 3260 basically is this selling bar here. So I would like to pay close attention to how actually the price will react and interact with the selling bar here. All right, so this is my plan for today, and this is pretty much the end of the video. Hope you enjoyed it. One thing before I end this video, I would like to talk about the broad market. So let me just take a look at a few other instruments as well, the Nasdaq, the Dow, and the Russell. So if you look at the Nasdaq, pretty much I think is still within this trading range. And last Friday was actually hitting the demand line of the channel, and with the strong demand tail, overall is presence of the demand as seen on the volume as well, together with the price spread. So definitely, I think in terms of the structure and the volume spread analysis, it should just have an attempt to go up. And similarly, on the Dow Jones as well, similar volume here, but small spread here. Probably have a chance to have a rally up to see how it goes. And definitely on the Russell, well, on the Russell 2000 is a bit different, because if you compare the spread, I think on Friday was a bit bearish. So definitely, apart from Russell, I think the S&P 500, Dow, and Nasdaq perform similarly in terms of the price action. So overall, I think this is how I view the market. Still need to see how the reaction goes, and whether the rally will have some significant change of the structure for today. All right, so this is the end of the video. Hope you enjoyed it and get something out. If you like the video, just click like and also hover to my name or picture to follow me. Do remember to subscribe to my channel so that you get instant notification of my future video ideas. So as usual, if you have any kind of the comments, suggestions, or trade ideas you would like to share with me or like me to have a look, feel free to comment it below. I will reply to you. Thanks for watching. I will talk to you soon. Bye bye.